Hey everyone, welcome to this video where we'll delve into the world of trading and uncover the secrets of a high-performing strategy. Today, we'll focus on 3 powerful Tradingview indicators that can help you take your trading game to the next level. Let's begin with the supply and demand-based pattern indicator, a crucial tool in your trading arsenal. This ingenious tool identifies rally-base rally, RBR, and drop-base drop, DBD patterns, signifying periods of intense momentum. It's a reliable way to spot potential trend continuation or reversals in the market. From a technical analysis perspective, RBR and DBD patterns stem from Wyckoff's supply and demand theory. Essentially, an RBR pattern represents a bullish setup where demand overpowers supply, driving prices upwards. Conversely, a DBD pattern suggests a bearish setup, indicating an excess of supply over demand, pushing prices down. In order to harness the full potential of the supply and demand-based pattern indicator, we must first fine-tune its settings. Navigate to the indicator settings, and there we encounter 2 crucial parameters begging for our attention: candle health and base max retracement. Let's delve a little deeper. The candle health parameter serves as the gatekeeper for the initial surge or plunge phase of the pattern. It ensures that the momentum is ignited with a considerable push, setting the stage for the upcoming rally or drop. The careful calibration of this value empowers us to manage the degree of vigor required for the initial movement. Suppose we hike the value. This acts as a filter, sieving out the weak or less consequential patterns. But what if we decrease the value? That widens our scope to capture a greater number of patterns, albeit with a possible dip in reliability. For the trading strategy we're focusing on today, we need to dial up candle health to 65. This is a finely balanced figure that allows us to capture significant patterns without compromising on reliability. Next up on our radar is the base max retracement parameter. It serves as a form of reins, setting a cap on the extent of retracement permissible during the base phase of the pattern. This essential parameter helps in mitigating excessive pullbacks, thus ensuring that the base doesn't slip beyond a specific proportion of the original rally or drop. The calibration of this value leaves a tangible impact on the overall architecture of the pattern and subsequently on the trading opportunities at hand. If we opt for a lower value, we're effectively nudging the system towards a more cautious approach. This results in a more efficient and patterns with tighter bases, potentially sidelining some patterns in the process. On the flip side, a higher value welcomes patterns with wider bases, but with it comes the hazard of embracing weaker or less dependable patterns. Our strategy, however, calls for a boost in basem ascetis retracement, up to the value of 1. This increase will allow our approach to accommodate broader bases while still maintaining a reasonable level of reliability and effectiveness in our trading. Now, it's time for us to shift our focus to our second indicator in the lineup. Please go back to the Indicators Search tab and key in Ultimate Volume Supply and Demand. This tool is a real power performer. It incisively gauges buy sell pressure, pinpoints volume trends and uncovers instances of supply-demand absorption. This indicator comes equipped with a host of customizable parameters, including a unique money volume option. It's these features that make this tool a treasure trove of valuable insights, significantly enhancing your trading strategy's potency. With the ultimate volume supply and demand indicator as part of your arsenal, you're essentially equipping yourself to make more informed decisions, thereby boosting your chances of security covering profitable trades. This tool is an absolute game changer, providing you with the competitive edge that every trader aspirations for in the fast-paced world of cryptocurrency. Let's delve into the settings. Set the plot height to 30%. This provides optimal visibility of the indicator plot relative to the main price chart without overwhelming the visual field. Then enable money volume, thereby letting the indicator calculate the trade volume in monetary terms instead of the quantity of tokens traded. This parameter is especially crucial in crypto, given the vast disparities in individual token prices. The aggregation with options setting provides different methods of data aggregation. The Smooth MA option offers a balanced view of aggregated values over time, highlighting any longer-term trends in volume that could impact price movements. Set the length to 20 to align the volume data with the typical 2-week cycle of crypto price patterns. Supply and demand dynamics significantly influence market trends, and the indicator's low-high volume detection and supply-demand absorption feature can help identify these shifts. Enabling this feature lets the indicator identify periods of unusually low or high volume activity and spot instances of supply-demand absorption, potentially indicative of trend changes. Finally, activate the option Separate Accumulation and Distribution and adjust AD Moving Average Scale and AD Weight to 4 and 0, respectively. These settings fine-tune the indicator's insights into buying and selling pressure, a valuable insight for anticipating potential price movements. Before you like this video and subscribe the channel for more new unveiled strategy. Now it's time to add our final piece of the puzzle, our third indicator to the chart. Let's swing back to the Indicators Search tab and seek out the Relative Trend Index. The Relative Trend Index, RTA, is an ingenious tool, specifically engineered to measure the potency and trajectory of market trends. What makes the RTI unique is its harmonious blend of trend following and mean reverting characteristics. It's an adaptable warrior in the face of market volatility, adept at minimizing the impact of fleeting fluctuations. In contrast to the more conventional RSI, the RTI provides a panoramic view of the market landscape. It takes into account the relative positioning of the current closing price within its recent range, offering a more in-depth analysis of market conditions. Now, let's dive into the heart of this amazing indicator and calibrate it for peak performance. Head over to the settings where you will find a few key parameters we need to adjust. First, we have the trend data length. This parameter is essentially the timeline of your market analysis, defining the number of data points used in calculating the trend. If you increase the trend data length, it's like zooming out to get a broader market view, which captures long-term trends and delivers smoother results. However, it's worth noting that this setting might be less reactive to sudden market changes due to its extended focus. On the other hand, decreasing the trend data length is like zooming in on the most recent data, prioritizing short-term trends. It offers a rapid response to market changes but is more vulnerable to market noise and swift fluctuations. For swing traders, I recommend tuning this setting up to 105, while short-term traders might find better results by dealing it down to 95. The second parameter we need to consider is trend sensitivity. This parameter sets the threshold for what we consider a significant trend. If you choose a higher sensitivity level, fewer price movements will pass the significant trend threshold, which results in a less sensitive trend. Conversely, setting a lower sensitivity level means that more price movements are deemed significant, creating a more sensitive trend. For our strategy, we will moderately reduce it to 93. By adjusting the trend data length, traders can tailor the indicator's responsiveness to match their chosen time horizon. A longer trend data length caters to those who concentrate on long-term trends, whereas a shorter trend data length caters to those seeking short-term movements. Meanwhile, modifying the trend sensitivity allows traders to customize how responsive the trend is to price fluctuations. Higher percentages lead to a less sensitive trend, filtering out minor shifts, which is ideal for traders seeking more stable signals. Lower percentages enhance sensitivity, capturing smaller departures from the norm. Perfect for those who want to quickly adapt to market changes. Now, let's bring it all together. The strategy is simple yet powerful. Whenever the supply and demand-based pattern indicator gives a buy signal followed by a bullish green candle, check if the ultimate volume supply and demand indicator shows a bullish volume candle. If these conditions are met, open a long position. Similarly, for short positions, watch for a sell signal followed by a bearish red candle and a bearish volume candle. Open a short position here. Moreover, the RTI can help us catch trend reversal opportunities. Open a long position whenever there's a bullish divergence between the RTI and the price, and open a short position for a bearish divergence. There you have it, a potent trading strategy suitable for Forex, crypto, and stocks, powered by 3 highly effective TradingView indicators. As you venture into implementing this strategy, don't forget the importance of backtesting and practicing on a demo account before engaging in live trading. Stay mindful of your risk tolerance and always trade responsibly. Until we meet again, happy trading, and may your profits soar to new heights. May the markets be in your favor. Thanks for watching our video.